Hey, Webby Trades! I want to do a video analysis update on my top 30 stocks for 2022. As always, I take half the position size in growth as I do value stocks to compensate for the higher beta. We'll start with DraftKings and crypto miners. This is a 1, 2, 3, 4, 5 wave 1. Now an ABC correction wave 2, where the length of wave A, place of wave B high. Looks like it's where wave C is ending near the 78.6% fib. So I want to see this wave 1 high of 19.50 hold. And I want to see DraftKings turn around the left side of the base, the right side of the base, and begin a huge wave 3 to new highs. I think PIN is a great chart with DraftKings. It's a very similar idea that we could have seen the left side of the base form in 2021, and we can follow the right side of the base in 2022. So I think PIN is a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So if we're above 13, the length of wave 1, place of the wave 2 low, can take PIN to a new all-time high before shallow wave 4 and a wave 5 higher confirm a huge base breakout. Here is Marathon Patent Group. Mara formed a big wave 1 and a wave 2, then another wave 1 and another wave 2, ending right now at the 78.6% retracement. I think Marathon Patent Group is going to hold 18 to 22 and go the length of wave 1, place at the wave 2 low, all the way to 93, while Bitcoin starts to head to the 6-figure range. We can see Marathon Patent Group head to the 3-figure range. I think it and Hut Mining were huge leading indicators. They were really the biggest crypto miners to go break that high from the first and second quarter before a wave 2 correction. I think that this is a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low, can take Marathon Patent Group to 93 before a shallow wave 4 and a wave 5 higher. I know that sounds crazy, but so did this whole rally that I predicted. It sounded crazy too. And guess what? Marathon Patent Group was all over the bar chart, straddle, and strangle screener with Tesla this summer. So this is the bar chart straddle and strangle screener from July, right? What do we see? A lot of options are being bought on Tesla, and they're also being bought on Marathon Patent Group. So lots of open interest, low implied volatility. That means institutions are probably taking advantage of cheap hedges, preparing for a big move. And a lot of times that move can be to the upside. Sometimes there's a shakeout first, but right now we see Marathon Patent Group and Riot Blockchain on the bar chart straddle and strangle screener a lot together. I think they could be getting ready for the next leg higher. Ethereum, which I'll talk about, is a great chart, my most important chart right now for crypto. Riot could be a wave 1 and an ABC wave 2. It could be the laggard, and Marathon Patent Group is the leader. So Marathon Patent Group has already gotten way up here. I think this could be another wave 1 and another wave 2. That means the 161.8% extension is 62, and that would be a kind of short-term wave 3 target before shallow wave 4 and a wave 5 higher. Right now, we're getting close to this wave 2 low. I want to see the 78.6% retracement of 16 hold, and I want to see Marathon Patent Group hold 18 to 22. I think both of them could be getting ready to go make new highs together with a lot of crypto. So that is the crypto mining sector. Here is Taiwan Semis and Intel. The laggard semis is something I was really looking for a big breakout in the fourth quarter. We got that with Qualcomm. Now we have it with Micron. We've been looking for Taiwan Semis and Intel to follow. We're starting to see that could be the case. This is a wave 1 and a wave 2, a huge wave 3, and an ABC wave 4. We're right around the 23.6, 38.2% retracement. We begin a new year, and all of a sudden, there's great news about TSM. The length of wave 3, place of the wave 4 low, says this could be the left side of the base, and this could be a lot of accumulation. We're going to have an explosive base breakout. The length of wave 3, place of the wave 4 low, can take TSM to 208 as Qualcomm goes to 232 and Micron goes to 121. Here's Intel. I don't think it's going to keep being the laggard, kind of like TSM. All of a sudden, new quarter, new year, new leaders within the semiconductor sector. 1, 2, 3, 4, 5, wave 1, ABC wave 2 at the 78.6% fib. It could be just like, the spring and the first quarter of 2021, Micron and Intel have a big move together. 1, 2, 3, 4, 5, wave 1, wave 2, the length of wave 1, place of wave 2 low, says the next minimum wave 3 target is 72 before shallow wave 4 and a wave 5 higher. I can see that this summer, this spring, we get into the 70s before shallow wave 4 and a wave 5 higher. If it happens, it's probably going to happen pretty quickly. So Intel, also a lot of accumulation on the bar chart straddle and strangle screener. Speaking of, Micron's big rally was forecasted by high open interest and low implied volatility, and this was right around I started talking about, Micron a lot in the middle of November. I didn't pull out a hat. So some people think they're, counter trading me or they're inversing me. You're usually inversing the largest players in the options market. Okay. So anyway, just, thought some people should know this is a wave 1 and a wave 2. And another wave 1 and another wave 2, ending at the 61.8% retracement. If we're above 13.94, the length of wave 1 placed at the wave 2 low can take American Airlines to 31 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low, says that we could see American Airlines in the 40s down the road. Now, right now, I just want to see that the Boeing setup and the American Airlines setup play out. We'll hold 13.94. Go. The length of wave 1 placed at the wave 2 low, all the way to 31. Aggressively, I could see that this spring, more conservatively this summer before a shallow wave 4 and a wave 5 higher. I think American Airlines, I think Boeing, I think Disney, best viewed for the long-term. Credit Suisse is a bank. A lot of times the banks and the tanks move together, right? It's no accident we see oil rally with the airlines. 1, 2, 3, 4, 5, wave 1, ABC wave 2, hey, puppy trades. No one cares about value stocks. And then, what happens? The new year begins and oil's the only thing ripping. Wave 1, wave 2, the length of wave 1 placed at the wave 2 low can take Credit Suisse from 0 to 100 real quick, all the way to 17.56 before a shallow wave 4 and a wave 5 higher. So Credit Suisse, if it's above 8.28, can have a pretty explosive wave 3 rally with Deutsche Bank, with a lot of regional banks. Here is Camping World, wave 1, ABC wave 2, wave 1, wave 2. Why is Camping World grouped with Astrazeneca? They're both kind of diversification plays. They're both kind of inflation plays. So inflation can be played in a lot of ways. It's not just gold and silver. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Camping World to 61 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take Camping World into the 70s. I want to see 32 not get broken, with 28 being the invalidation level. Here is AstraZeneca, very similar setup. They're also grouped together because they're the exact same nest. Wave 1, wave 2, wave 1, wave 2. The length of wave 1 placed at the wave 2 low can take AZN to 71 before a shallow wave 4 and a wave 5 higher. All in all, you heard it here first. AstraZeneca is the 2022 version of Pfizer. It's going to the 80s, I believe. So let's see. Here is B2 Gold Corp, BTG Gold Corp. It's got a funky name, but it's got a pretty chart. 1, 2, 3, 4, 5, wave 1 and wave 2. Huge wave 1, ABC wave 2. The length of wave 1 placed at the wave 2 low can take B2 Gold all the way to 8.71. That is more than double the current price before a shallow wave 4 and a wave 5 higher. We don't even really need to talk about waves 3, 4, and 5. But just the idea that a company that mines rocks could double and triple, right? That normally is something you only see from a sexy growth stock. So this is a company that mines rocks. It could double, it could triple. I think the institutions would be very interested in that. That's probably why they've been accumulating it for so long. We have seen a lot of open interest and volume on options on SLV throughout December. And that was in conjunction with low implied volatility. I think what could happen is that the precious metals aren't going to give retail traders time to reestablish that cost basis. Let's look at first Majestic Silver AG, very similar idea. Wave 1, ABC wave 2, ending at the 61.8 to 78.6% fib. So I think this has a nice kind of stop level of 8.42. The length of wave 1 placed at the wave 2 low. This can be a pretty big rally. The wave 3 minimum target is 30 before a shallow wave 4 and a wave 5 higher. So 30, that's going to take some time, but this is probably not going to move slowly if this is a wave 3 that begins. The length of wave 1 placed at the wave 2 low says we could be talking about Redditors moving the silver market, sooner than later. So I'm in the precious metals for the long haul, but what I'm kind of seeing is that it might not take too long. It could go from metals moving very slowly, low implied volatility, low sentiment, to moving very quickly, high implied volatility, expensive options, and during that time, usually high sentiment as well. Here is uranium fuels. Uranium fuels is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. So if U is above 78.6% fib, about 5.8, the length of wave 1 placed at the wave 2 low can take it to 13.8 before a shallow wave 4 and a wave 5 higher. A pretty explosive nest, in my opinion. Wave 1, wave 2, another wave 1 and another wave 2. It's a more aggressive view of energy, kind of what I talked about with Oxy, where these are kind of the 1, 2, 1, 2 LA Wave Nest, XLE and ExxonMobil. They're more of the wave 5 higher. So in this slot, I want to talk about oil laggards, and I'm just going to talk about one, but I think there's a lot of oil laggards that could kind of fill this slot. Energy Transfer ET is the one I'll focus on in this video. This is a wave 1 and a wave 2, a wave 3 and a wave 4. And believe it or not, this is the most conservative view of oil, in my opinion, is that this is a leading diagonal from the March 2020 low. Okay, if that's the case, this is wave 1 and wave 2. This is wave 3 and wave 4. So we'll hold above 7.21 and go to the upper bound of this trend line. around say 13 to really wherever the upper bound of the trend line from connecting the beginning of the wave 1 high to the wave 3 high. That would be typically where a wave 5 would end for a leading diagonal. But I think we're going to head to 13 or 14. I think we're going to head above 7. We're going to hold above 7.21, head to the 13 or 14 range. I think there's also a good possibility that this is not a wave 3 and a wave 4. It is another wave 1 and another wave 2. That's kind of the more explosive view. So I have used, for example, option straddles on Kinder Morgan to manage downside risk. So one way that I manage downside risk, besides position sizing, besides cash positions and time horizons, is option straddles. So this is something that I shared that I was taking in the middle of November. We had all of the oil stocks have very cheap options and high liquidity. So I was looking for a big move in oil. What I did was I bought each 15 strike put that expired in 2023 for Kinder Morgan, and I paired it with the 17 strike call. So each of those was $145. That means that each lot for the straddle was $290. So as recently as late December, oil fell. The put was near in the money and was actually a gain to 306. Now Kinder Morgan has recovered, and now today the call part of the lot actually became in the money. So that's kind of pretty cool. I went from having a net short position on oil through this straddle just a couple of weeks ago, and now I have almost a net long position through this straddle, and it doesn't expire until 2023. So this is one way that I kind of ensure my portfolio from downside risk is through option straddles. This is an example that I've shared. It's just one where I bought a $145 call, paired it with a $145 put, and each of those pairs was $290. Right now they're both $272, but now I have close to an in the money call position on Kinder Morgan. It looks like XLE, it looks like ExxonMobil are going to rally substantially. So if you guys want to see how my straddle is doing, then I entered the 15 strike put at 145 and the 17 strike call at 145 each. They were worth 290. Now they're worth 272. So you can see how I do, but I just wanted to kind of share one way that I manage risk to the downside. And that's through option straddles. Here is TWLO, wave 1, wave 2, wave 1, ABC, wave 2. TWLO is getting close to this wave 2 low of 216. That's a pretty big deal because I'm looking for this to be a wave 1 and a wave 2 and another wave 1 and another wave 2. So I think we'll hold above 216, go turn around, fill out the left side of the base and the right side of the base. And I'm looking for TWLO and Octa each to hold these wave 2 lows and go fill out the left side of the base, the right side of the base within wave 3. All in all, if that happens, these red numbers, waves 1, 2, 3, 4, and 5 can take TWLO all the way to 700. Okay, so 216 is getting a little tight. Octa is a similar idea. So I'll talk about Psja possibly being a great ETF for software bulls, but Octa is a similar idea. It's a wave 1 and a wave 2. I'm looking for a 1, 2, 3, 4, 5, another wave 1, and an ABC to end wave 2. So I want to see Octa hold above 185. I want to see it turn around, fill out the left side of the base, the right side of the base, head to new highs. And in the same way that TWLO can head to 700, I want to see TWLO and Octa both hold these wave 2 lows. For Octa, it's 185, and Octa's waves 1, 2, 3, 4, and 5 can take it to 400 in the longer term cycles. Here's Psja. Psja is a software ETF. It's a wave 1 and a wave 2. It's another wave 1 and another wave 2, ending right around the 61.8% retracement. So this deeper wave 2 correction rules out the idea that this is a wave 3 and a wave 4. That means that once this rally in the future, if it's replicated, the equal legs target is hit, that would just be the minimum wave 3 target, in my opinion, before shallow wave 4 and a wave 5 higher. So the count is that this is a wave 1 and a wave 2, ending at the 61.8% retracement. A nice level right now is this wave 1 high of 107. The widest invalidation level is the 78.6% fib of 95. For a low beta ETF, I don't think the 78.6% retracement of 95 will go. The wave 1 high, I want to see hold as well of 107. Then the length of wave 1, place of the wave 2 low, says Psja can turn around and software's 6-year period of outperformance can kind of resume, and that maybe 2021 was just a pause year This could be a wave 1 and a wave 2. That means Psja, if it turns around, would have a minimum wave 3 target in the future of the 230s before a shallow wave 4 and a wave 5 higher. So with ARK getting close to 81, which I'll talk about in a little bit, I want to see Psja hold above 107. So getting a little tight. I think we should see some reversals. So we'll keep an eye on that. Here is Beyond Meat. Here is Farmer Brothers Coffee. So Beyond Meat. Why is it grouped with Farmer Brothers Coffee? Well, I think they're both huge diversification pieces, and I think that they're also both plays on the rising price of food, but really, there's no kind of comparison to Beyond Meat, right? There's only one debate, though, right? And I think even the bears would agree that this is all institutional activity. This is essentially a range from this entire impulse of 45 to 239. Beyond Meat has stayed in this range for about the past 2 years, even longer than 2 years. This is all institutional activity. The debate is this distribution, and Beyond Meat's going to go break below 48 and head to 10, right? That's essentially the bear argument. This was all distribution from the IPO. Beyond Meat's going to break this low and head to 10 and 5, okay? And that's kind of what stops are for. If it doesn't break below 48, though, it could turn around and prove that this is 2 years of accumulation out of the IPO. This is the company right now that's partnering with McDonald's in the same way kind of Roku is partnering with YouTube. You know, it's kind of going to be one of those partnerships that could feel obvious in hindsight. But I think this is a 1, 2, 3, 4, 5 waves impulse. Coming into 2021, I was looking for Beyond Meat to have a huge move for this wave 5. And then when we had a 40% gap up, I tweeted in all caps, you know, there's probably going to be a correction. Once we kind of got into this range near 100, I thought it might be time to start looking for a wave 2 to end. We've had a deep wave 2. We haven't broken the low of 48. I think there's a lot of evidence that this is a 1, 2, 3, 4, 5 waves impulse. So I don't think we will break below 48. And I think Beyond Meat will turn around. If it does, and if at any point in the future it's above these highs, it's a 2.5 year IPO base breakout. It is a long-term explosive run that is going to occur. And there might not be too many analogies in the market, even historically, for what can occur if Beyond Meat does get into the 230s and the 240s in the future. Likely, it would take a couple of stock splits to really get what the true price target would be down the road. Right now, the risk is well defined. If Beyond Meat's above 48, you know, it could be one of those stocks, one of those historical stocks. For Farmer Brothers Coffee, it's another play on the rising prices of food, the rising prices of commodities. I'm not trying to get carried away with correlations, but one thing we have kind of seen is that when kind of platinum and a lot of the value plays rallied from March of 2020 to February of 2021, that those dates were kind of the same time period that ARK and a lot of the innovation stocks rallied as well. And then obviously they both have sold off since that February high. So there could be a connection between growth stocks and commodities prices. Here is Farmer Brothers Coffee. It kind of supports the idea of rising food costs. 1, 2, 3, 4, 5, wave 1, ABC wave 2, between the 61.8 and 78.6% fib. I want to see farm above 5.47. And it should go the length of wave 1, place of the wave 2 low, all the way to 15 before a shallow wave 4 and a wave 5 higher. Really, that wave 3 target can be as high as 19 in the future. So one thing I like about farm, and one thing that I think is kind of similar to Beyond Meat, huge diversification pieces. You know, they're kind of unicorns. So here's Li Auto. We'll talk about Alibaba as well. Li Auto looks really pretty. Someone said they were bearish Neo, but they were bullish XPEV and Li. I thought that was very interesting. This is a wave 1 and an ABC wave 2. This is a wave 1 and an ABC wave 2. So pretty, cool chart right now for clean energy bulls. I want to see Li above 25. If it is, then this is another wave 1 and another wave 2. The wave 3 target is 44 before a shallow wave 4 and a wave 5 higher. That could confirm an IPO base breakout. And there's a lot of stocks in the IPO sector, from Lucid Motors to Unity Software to possibly Palantir and now Li and XPEV that could be an IPO-based breakout, just like Beyond Meat, just like DraftKings. Stocks that have recently IPO'd by nature have a higher risk reward. Every stock that we call, a low beta safe play was once a risky gamble. Okay, we think MasterCard right now, if someone says they're buying MasterCard, you don't really look at that person and say, oh, you're a gambler. But in 2008, MasterCard lost 60% of its value. Okay, every stable winner now was a high beta gamble in its youth. And I think right now, Li Auto and XPEV and Unity Software, they kind of show some of those might play out. Wave 1 and Wave 2, I take half position for growth because I know that volatility is the price that investors pay for capital appreciation. I know the best opportunities, they are going to shake you out. I bought XPEV at 29. I didn't care that I probably wasn't catching the bottom. It fell to 22, and I was just going to hold it for forever. Okay, it's okay to be called a retail bag holder. What's not okay is to think that, calling someone wrong on the internet, at least in the trading world, is some type of insult. Okay, losing trades and winning trades are part of the same process. I think this is a wave 1 and a wave 2. Li Auto can hold 25 and go to 44 before a shallow wave 4 and a wave 5 higher. Let's talk about NetEase and Alibaba right now. A lot of people, they're very bearish Alibaba and they're very bearish NEO, but they're not bearish Li Auto and XPEV, and they're not really bearish NetEase. And if you understand how ETFs work, that doesn't really make sense. Wave 1, wave 2, 1, 2, 3, 4, 5, wave 1, ABC wave 2. I think that NetEase, kind of similar to XPEV, could end up being a huge leading indicator. If this is a wave 1 and a wave 2, then NetEase should hold above 74, a little tighter would be 77, and it could be the first Chinese internet stock to break the February 2021 high. And it looks like it should, because this is a clear 1, 2, 3, 4, 5 waves impulse. It looks like this is a wave 2. The length of wave 1 placed at the wave 2 low can take NetEase to a new high to 175 before a shallow wave 4 and a wave 5 higher. So NetEase above 74 to 77 would probably be a more useful level than anything Alibaba is giving us. So I bought Alibaba in the 160s before earnings. I am a retail bag holder, right? It's okay. It's not my biggest fear in the world is being called wrong on the internet. Sometimes when you see the all caps bears, that's a good thing. 1, 2, 3, 4, 5, wave 1, ABC wave 2 at the 78.6% retracement. So I'm just going to hold Alibaba. If it goes to 0, then I never have to invest in, e-commerce and Chinese growth ever again. I don't think that's going to be the case. I think that this was kind of a rare year, right? 2021, that was kind of maybe a statistical anomaly, I guess I would say. And that kind of dramatic opportunity might not come for a very long time. There's going to be many quarters and there's going to be many years in the future. I think that we could see in a lot of those, Chinese stocks are huge outperformers. 1, 2, 3, 4, 5, wave 1, ABC wave 2. So we are at the 78.6% fib. I'm going to hold Alibaba for the long haul. My plan is to sell half of it at 500. And if we break above this high, then I'm going to sell the rest based on whenever Amazon ends its rally on a percentage basis from the 2008 low. So that's where my idea is. I'm going to use Amazon as an analog for selling Alibaba if we break to a new all-time high. That's what I'm going to do personally. So that's what I see as the upside. It's Amazon in 08, wave 1, ABC wave 2. And I could be wrong about that, right? Being called wrong on the internet's okay. Using Apple and Netflix and Google products and Amazon products for a decade, but never buying their stocks. I think that's kind of more of an issue. Wave 1, ABC wave 2, wave 1, ABC wave 2 for XPEV, right? So if you're bearish NEO, but you're bullish XPEV, it might be a pair trade, whatever. Wave 1, wave 2, if XPEV is above 33, this is another wave 1 and another wave 2, it's going to 70 for wave 3 before a shallow wave 4 and a wave 5 higher. One thing I have liked to see from NEO recently is that it's kind of moved, at least for the past 2 or 3 days, with Tesla, XPEV, and Li. And that's kind of a good thing because I think a lot of them are going to recover. Wave 1, wave 2, wave 3 to 70 is what I expect for XPEV. And then just like Li Auto, that would confirm an IPO base. And these stocks that are so young, they're so recently IPO'd, we don't know what XPEV is going to be. Okay, that's not a bad thing to not know what a stock could be, right? We didn't know what Amazon could be. We didn't know what Apple could be. And then when they lost 60, 70% of their value in 2001, we said, I told you so. It's okay. Here's NEO. NEO looks like a 1, 2, 3, 4, 5 wave 1. It looks like a wave 2 is ending between the 50 to 61.8% fib. So we are getting close to 26. I want to see Li Auto hold above 25, and I want to see XPEV hold above 33. Right now, I want to see that NEO will end wave 2 between the 50 to 61.8% fib. The reason that 26 kind of has to be respected is because below 26, The 78.6% retracement is a little far. What could happen in the future is NEO could break this downtrend line, and a lot of Elliott wave theorists, if there's a clear downtrend line, will use that as evidence that we have begun a new bullish cycle after a corrective cycle. So I think that could happen with NEO, where it breaks above this wave one high. I think more importantly for NEO, there's a lot of holistic evidence from Tesla, Enphase Energy, and XPEV, that those stocks are going to be doing well, right? So if you think that XPEV is going to be doing very well and Tesla is going to be doing very well, and then you buy a bunch of puts on NEO, you kind of have an identity crisis. But I think that this is a huge wave one, and they are making, the Chinese Tesla difficult, because maybe it is the Chinese Tesla. If it's above 26, the length of wave one, placed at the wave too low, can take it to new highs. The minimum wave three target down the road is in the 90s, okay? That would just be a minimum wave three target before a shallow wave four and a wave five higher. 26, realistically, is usually too tight for growth. That's why I'm going to introduce what I promise is my last clean energy ETF. This is the last one. I know I've talked about a lot of clean energy ETFs, but this holds a ton of 3 stocks that are really important. The biggest holdings are NEO, Enphase Energy, and Tesla. And when we look at this chart for QCLN, this is a huge wave 1, wave 2, wave 3, and a wave 4 that ended at the 38.2% retracement. From this low, I think we form another wave 1 and another wave 2. I think the wave 3 target is 101. So the reason that I wanted to introduce QCLN was 2 reasons. One, it holds NEO as one of its biggest holdings. Tesla and Enphase Energy are the other biggest holdings, and they've already broken this February high. So that was the biggest reason. Enphase Energy and Tesla, they're already above this high, or at least they've broken above this high at some point. So this kind of has better invalidation levels for NEO than 26 is QCLN, which holds a ton of NEO. Holding above 59 would be a little tight. The invalidation level is 53. If those have held, this is a wave 1 and a wave 2. It lines up with Tesla and Enphase Energy. It will go on a wave 3 with NEO to over 100 before a shallow wave 4 and a wave 5 higher. That's QCLN. That is the last clean energy ETF, but it's the one that holds the most amount of NEO. Here is ARK. We'll talk about ARK, Roku, and Zoom. And Fastly right now, I think this is a wave 1 and a wave 2. This is a wave 1 and an ABC wave 2, where the length of wave A places the wave B high is where wave C is ending at the 61.8% retracement. So realistically, 81's pretty tight. That's why I think PSJ above 107 is going to be a really important chart. So I'll be covering PSJ and ARK a lot, but I want to see PSJ above 107. ARK doesn't have a better invalidation level until 60 if it goes below 81. But what this could be is that this is a wave 1 and a wave 2, and it's very kind of clear with Square Cash and PayPal that all this kind of price action is a wave 1 and a wave 2. This is most likely another wave 1 and a wave 2, ending at the 61.8% retracement. So let's just define the upside risk. What if ARK turns around? If ARK turns around, the minimum expectation from an Elliott wave perspective is it will break this high, most likely in 2022, and it will confirm a huge base breakout. It will confirm that all of this is accumulation by institutions and retail margin capitulation, a la DraftKings. This is then another wave 1 and a wave 2, so the minimum wave 3 target down the road would be 208 before a shallow wave 4 and a wave 5 higher. So it's going to be a big deal if at any point in the future we see ARK above 159. It's not going to be a double top. They'll say it's a double top, but that's not going to be a double top. That's going to be a massive base breakout, and that's the upside. So I'll use PSJ and I'll use some individual ARK holdings to define the downside. But understanding the upside right now for ARK is important. I consider it upside risk just as much as I consider it downside risk. A lot of people really understand there's downside risk in the market. The way I think about it is, what if software and e-commerce runs off and I don't have exposure? We could have multiple quarters where the biggest winners in the market came from the e-commerce sector, the software sector, the Chinese market, right? And so if I'm someone who wants to make a living in markets, I'm going to have to own those names. This is a 1, 2, 3, 4, 5 wave 1 in an ABC correction. Wave 2 for Roku. If it's above 176, that's the wave 1 high. I think we're going to turn around and go the length of wave 1, place of the wave 2 low. This is the 61.8% retracement. The widest invalidation is it's pretty far from the current levels. it's 124. That's a 78.6% fib. Realistically, if I'm investing in a growth stock that I think could have a Netflix analog or a Google analog or an Amazon analog in its future, or if I even think that's a possibility, then I will manage the risk up front by taking half the position size as I would for a value stock to compensate for the higher beta. It's honestly pretty easy to find a value stock setup where a 15% stop probably isn't going to be hit. It's almost impossible to do that with growth. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8% retracement. I want to see the wave 1 high of 176 not get broken. And I want to see Roku turn around, fill out the left side of the base, the right side of the base, and have an explosive wave 3 breakout. If any of that happens, if Roku is ever above this high, the minimum expectation is that the length of wave 1 placed at the wave 2 low is a minimum wave 3 target of 650 before a shallow wave 4 and a wave 5 higher. I called Roku the stock of the summer during this level. Now I think it could be, maybe with ARK, something that is comparable to tech in the later 2000s. Maybe, okay? That's the upside. Now it's up to me to define the downside. I normally do that by managing risk up front, by taking smaller position sizes. That's how I ended up getting XPEV and Lee, because I didn't have to have a stop. If I had, I probably wouldn't have gotten stopped out. Here is 1, 2, 3, 4, 5 wave 1 for Zoom. Now an ABC correction wave 2 at the 78.6% retracement, right? This is Zoom, okay? So if a retail trader thinks that Zoom could be Google, if there's even a chance that Zoom is a possible Google, where it goes and it breaks above this high, and it's in the 590s, it's in the 600s, then the minimum expectation is that the length of wave 1 placed at the wave 2 low can take Zoom to 700 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. Okay, so a lot of people thought that Zoom was going to take over the world. The chart says that those people were right. Zoom probably is going to take over the world. Maybe it's going to take over the metaverse. Who knows? Maybe there's going to be another, what. But this is a 1, 2, 3, 4, 5 wave 1, possibly a wave 2, ending at the 78.6% retracement, right? They're not going to make Zoom easy. So for me, managing risk with position size is the only way to go for a lot of ARK holdings. That's what I've been doing. If we're above 107, that's a wide invalidation. But I think the length of wave 1 placed at the wave 2 low says that this is margin capitulation. Getting every single retail trader out of Zoom, and institutions are very quietly absorbing the supply for a massive base breakout in the future. This is the left side of the base. By the time it's above the right side of the base, everyone's going to think it's Google. But no one really wants to think that when it's at the 78.6% fib. So we'll see. Right now, 107, the wave 1 high, is the only realistic stop. I think Zoom could even take a long time, but exponential growth takes time. Statistically, most traders, most investors will quit within 2 years before their compound interest and their exponential growth has ever had time to take hold. And I think Zoom could be one of them. If it's above the wave 1 high of 107, I expect a wave 2 to end near the 78.6% fib, for it to go significantly higher, at least above this wave 1 high of 588, and confirm a massive IPO base breakout, huge accumulation, huge retail margin capitulation, which is very similar to how I view Fastly. Fastly is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. One thing I always like to point out, during this rally, Fastly and Datadog moved together, and then I think what happened is that Cloudflare and Datadog were the leading indicators for stocks like Fastly in the software sector, that they're going to go on big rallies for these wave 3s. I think this is a 1, 2, 3, 4, 5 wave 1 for Fastly. This is an ABC wave 2. We're at the 78.6% fib. So I want to see this kind of wave B high on the smaller degree. If this is an ABC correction, I want to see this wave B high not get broken. But realistically, Fastly is kind of like Zoom. The only way to realistically manage risk is with smaller position sizes. So that's what I do for growth. And I think if there were to be a stop, it'd be this high of 25. The length of wave 1 placed at the wave 2 low can take Fastly on an explosive wave 3 rally to new highs. And Fastly's not going to move slowly. It's not going to go trudge up to 136. And it's definitely not going to go trudge beyond 136. So right now, I want to see a wave 2 low get put in. Kind of similar to NEO. If it breaks this downtrend line in the future, that could be more confirmation that a corrective structure has ended. But even that would be nearly double the current price. So right now, I want to see Fastly above 25. I want to see it turn around, and I think it's very similar to DraftKings, very similar to Beyond Meat, very similar to Zoom, where the downside risk can be defined, but really the upside risk can't. So that's Fastly. Here's Square Cash and PayPal, as well as altcoins. So this is a big wave 1 and an ABC correction wave 2 for Square. I think this is another wave 1 and an ABC wave 2. We're at the 50% retracement. The 61.8% retracement, I want to see hold of 130. I just recently posted about iPay holding above 50 and what that could mean for PayPal. So I want to see iPay hold above 50. That holds Square Cash as well. But what I also want to see is I want to see Square Cash hold the 61.8% retracement of 130. The widest kind of stop would be this wave 1 high of 101. I think this is a wave 1 and a wave 2, and I think that this is a deep wave 2 correction. We're going to have an explosive wave 3. The length of wave 1 placed at the wave 2 low. Says Square, if it breaks above 289, is going to confirm this is margin capitulation, not just for Square, but really for the entire mobile payments sector. The length of wave 1 placed at the wave 2 low says Square can go follow Visa, PayPal can go follow Visa, and the mobile payments can be back in vogue. Then the minimum wave 3 target down the road could be 400. I want to see 130 hold for now. 101 would be the widest level, but I don't want to see really either of those goes. iPay, I think will definitely hold above 50, and I think that is going to be kind of where the floor ends up being for PayPal and Square. Right now, I want to see PayPal and Square hold the 61.8% retracement. And if they do, they're both very similar ideas. That this is a wave 1 and a wave 2. This is a massive wave 1 and an ABC wave 2, ending between the 50 to 61.8% fib. So just like Square, it's a little tight. I want to see PayPal above 169. Then it should go the length of wave 1 placed at the wave 2 low, all the way to 407 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. The biggest invalidation level, kind of similar to Square, would be this wave 1 high of 130, and just like Square, that's pretty wide. So I want to see the 61.8% fib hold. I want to see PayPal, I want to see Visa, and I want to see iPay and Square all recover together, and I think they will. Here are the altcoins. We'll stick with 2 in this video. We'll start with Ethereum. Ethereum's really the best view of crypto. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I think this is another wave 1 and an ABC wave 2. We're ending this between, or really right at, the 61.8% retracement. We could be ending an ABC correction for this classic wave 2 before a massive wave 3 that is at least the length of wave 1 placed at the wave 2 low. That could take Ethereum to 5.6K before a shallow wave 4 and a wave 5 higher. So I think the full count is that this is a 1, 2, 3, 4, 5 wave 1. This is an ABC wave 2. This is another wave 1 and another wave 2. We'll turn around at the 61.8% fib. A tight stop would be 3,129. The invalidation is 2,657. I think Ethereum will go the length of wave 1 placed at the wave 2 low, all the way up to 5.6K before a shallow wave 4 and a wave 5 higher. Let's talk about Ripple as the other altcoin in this video. There's really a few that I like. I like Litecoin. We'll stick with Ripple and Ethereum in this video. I think Ethereum is the prettiest view of crypto, maybe besides Mara. I think Mara might be the best view of crypto. This is a wave 1 and a wave 2 for Ripple. This is another wave 1 and another wave 2. Ripple, even with this sell-off, is up about 200 or 300% from when I talked about it a year ago. It got up nearly 600, 700% during this fever pitch rally. I think this was all a wave 1 and a wave 2. I think Ripple will hold above 51 cents and go on a wave 3 higher to $3 before a shallow wave 4 and a wave 5 higher. But really, I think this is a massive wave 1 and wave 2. So I think ultimately this huge wave 3 will end at the median of this Andrews pitchfork. So obviously a massive opportunity. They're going to make that very difficult. They're even going to take it off the exchanges. So very interesting. Here is TSE and Unify. I want to talk about some boring stocks, some inflation vehicles, but these stocks, they're not really going to have boring price action in the future. But it is interesting that they make rubber and they make plastic, right? They don't make iPhones. So that's something I'm thinking about. 1, 2, 3, 4, 5, wave 1, ABC wave 2, another wave 1 and another wave 2 for TSE. So I think a nice stop is 44, a little wider invalidation is 37, and I think that TSE and forms a new high on the relative strength index during this impulsive rally. I think that this is just a wave 1. It ended a wave 2 with that classic parallel bull flag. Now the length of wave 1 placed at the wave 2 low can take TSE to 106 with a dividend before a shallow wave 4 and a wave 5 higher. So TSE, very interesting value stock, very interesting diversification piece, right? I got told no one cares about value. And then, 3 days into the new year, now we should all probably care about at least oil stocks, but it's a lot of value stocks that could do very well. Here is Unify on the largest degree. 1, 2, 3, 4, 5. Wave 1, ABC. Wave 2, this is textiles. This is cotton, right? It's not, they're not reinventing the wheel. This is a huge wave 1 and a wave 2. I think this is another wave 1 and another wave 2. So I want to see Unify above 15. I think it goes all the way to the 161.8% extension in the larger cycles for this wave 3 of 62. I think the length of wave 1 placed at the wave 2 low says the next target is 43 before a shallow wave 4 and a wave 5 higher. So this is looking good. I want to see it above 15 and head into the 60s. So a lot of value stocks, a lot of boring stocks. They're not going to be as boring as we think. Boeing certainly fits that description. Huge wave 1 and wave 2, another wave 1 and another wave 2. I want to see Boeing above 170 going all the way to 100, the 161.8% extension, which is 363 before a shallow wave 4 and a wave 5 higher. The larger degree picture says that this is a wave 1 and a wave 2, and that this is another wave 1 and another wave 2. So we'll hold 170. We're seeing a lot of confirmation that oil is going to rally. What I've expected is that when oil rallies, we're going to see the airlines join them this time. I think this is a wave 1 and a wave 2. So the 161.8% extension is 363 before a shallow wave 4 and a wave 5 higher. All in all, Boeing going into the 400s could just end this blue wave 3 within the cycle from the March 2020 low. Here is Disney. I talk a lot about the short-term view of Disney, and we'll talk about it real quick. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 ending at the 50% fib. I literally read someone say that they sold Disney for a tax loss because they don't like their new management. I guess that's what they've been saying is driving Disney down. A lot of retail is waiting for this gap to get filled. Not all gaps get filled, and really it's about the gaps that don't get filled, because this is an unfilled gap. What some classical traders will say is that this is showing dominance of buyers over sellers. 1, 2, 3, 4, 5 wave 1, ABC correction wave 2. We might not see the market give retail a chance to reestablish their cost basis for some of these names. I want to see Disney above 126. I think it should go. The length of wave 1 placed the wave too low. Go fill out the right side of this base with a lot of volume. Do exactly what Micron just did. Do exactly what Qualcomm just did. Do exactly what Taiwan Semis is about to do. But I want to talk about the big picture for Disney. We won't really talk about this because, realistically, the short-term view is all that actually matters. But the big-term view is pretty important too. On the all-time, this is from 1987. Yeah, 1, 2, 3, 4, 5, wave 1. This is almost a 30-year bull market, and it could have just been a wave 1. This could all just be a wave 2 that ended in 2020, and this could be another wave 1 and another wave 2 that is retesting that wave 1 high. So it's important to understand the length of wave 1 places the wave 2 low. It's a long-term target of 267. But that's just the minimum wave 3 target on what could be a pretty small degree before a shallow wave 4 and a wave 5 higher. This could be an explosive nest for Disney, where this is 1, 2, 3, 4, 5 wave 1 and wave 2. This is another wave 1 and another wave 2. If we're above 126, 267 is a minimum target down the road for Disney. Great evidence for a lot of the reopening stocks we talked about. Here is Enphase Energy and First Solar. 1, 2, 3, 4, 5 wave 1, ABC wave 2. I predict this entire rally in full, and I could be wrong about the next one, but I think it's coming. Let's see. This is starting to look good. There's a clear invalidation. This is what I love about Enphase Energy. It's a clear invalidation. This is a wave 1 and a wave 2. So Enphase Energy, if it goes below 143, which is not far away, then this is another wave 1 and another wave 2. So I've just talked about QCLN. That's going to be very important. It wouldn't be the end of the world if it broke 143, but it would invalidate that this is a wave 1 and a wave 2. Until it goes, I think that is a wave 2 ending, and that this is another wave 3 that is going to occur. The minimum target would then be 296 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1, placed at the wave 4 low, Enphase Energy can go all the way into the 400s, okay? But all we really care about right now is just 143. And that's kind of a theme, right? We can always define the downside risk for growth names, right? But Enphase Energy kind of shows with a lot of growth names, we can't define the upside risk right now, right? We can't really define the upside risk for Zoom or for Beyond Meat or for Fastly or for Roku, right? We can give gauges, we can give minimum targets, but really the length of wave 1 placed at the wave 2 low says 296 is a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low can take Enphase Energy into the 400s. And that would be very good for QCLN. We'll talk about Tesla too. I want to see 143 not get broken. First Solar, just as important, very important, is a wave 1 and a wave 2, another wave 1 and another wave 2, and yes, another wave 1 and an ABC wave 2, right around the 78.6% fib. Very clear invalidation for First Solar. If it's above 67, this is another wave 1 and another wave 2. The length of wave 1 placed with wave 2 low says FSLR is going to 137 before shallow wave 4 and a wave 5 higher. Then waves 3, 4, and 5 can take FSLR to 178, and that would just end this black wave 3. Let's talk about Tesla right now. So love that invalidation level of 67 for FSLR, but there's a lot of evidence from a stock that, you know, we thought was a boring loser this summer, and the institutions were accumulating options on it, right? This is Tesla. 1, 2, 3, 4. Conservatively, a wave 5 is in progress, right? I got called a Tesla shill this summer in the 600s, right? But really all I was doing was defining downside and upside risk. And I said, look, if we're above this low of 539, this is a wave 1 and a wave 2. This is a monster wave 3 and an ABC wave 4. We talked at the beginning of this video how Tesla was all over the bar chart straddle and strangle screener. What I think is happening right now is that Tesla's giving the most important level in the market. If this wave 4 low holds of about 886, wave 4 has ended. That means that the length of wave 3 placed at the wave 4 low would give an ideal wave 5 target of about 1,590. But just in the short term, right, it's not really a good idea to bet that Tesla isn't going to make a new high above 1,243. Okay, I think what's going to happen is that Tesla will hold above 886, and it at least is going to make a new high within wave 5. I think the length of wave 3 placed at the wave 4 low is going to take Tesla to 1,589. So just like in-phase energy holding above 143 and FSLR holding above 67, Tesla holding above 886 is giving a very important level, not just for clean energy bulls, not just for growth bulls, but for market bulls in general.